You're someone who understands the economy and the relationship it has with the markets as well. If I could first begin by just getting your quick reaction on what we saw on Dalal Street, the markets at large, and of course the bond markets. When the RBI governor started speaking, India was shirking off the bad cues from the rest of Asia, but it's very clear that investors, the market stakeholders have been left wanting for more. If I could just first begin by asking you, is there an indication as well that yes, the moves by RBI are in fact very much needed, but more could have been done, we're still wanting for more?
Remember, I am a very old financial markets hand, so I don't get too swayed by movements in the financial markets. There are many things that affect it, including in international movements. So I wouldn't like to comment on how the market perceives it based on what happens in the last 10 minutes. All I will say is that the RBI governor's assessment of the situation is spot on. We welcome this cut in interest rates by 40 basis points. It was the need of the hour. He also mentioned a slew of measures which complements many of the things we have also done from the finance ministry's side. So, you can clearly see that we are working in tandem, step by step, and in a calibrated way, we are responding to an evolving situation. So let me say that the Reserve Bank governor was absolutely right when he said that there are clearly stress in demand conditions, both in India and internationally. He's obviously put together a package for the moment, and I think you will see that the Ministry of Finance will work in tandem and take this forward.
Sanyal, I want to use some of the phrases that the governor also used. The Monetary Policy Committee of the view that the risk to growth is the gravest. He's talked about demand collapsing. And it's not just today, but previously as well. We have heard RBI Governor Shaktikanta Das talking about doing whatever it takes, against this war. We're fighting against COVID, utilizing the entire ammunition which is available with the RBI. Can I ask you then what is it that the RBI perhaps is waiting for? Today, yes, fantastic moves, very badly needed, but it's not a bazooka, it's not a brahmastra that has been fired by the RBI governor. So with the kind of risks that are there to growth, with demand collapsing, why save it for later?
I think I've been on your channel many times and many others as well. And we have clearly communicated at multiple times that our approach is a different one. Other countries, maybe it makes sense for them to have done one grand package and that's the end of it. We have gone for a more calibrated approach. And the reason for that is simple. We are obviously dealing with an extremely uncertain situation. Our assessment is that this is not a sprint, but a marathon, and that we need to put these resources down. We are more than willing to do what is necessary, but we are doing it in a more calibrated way. Simply putting demand out, expansion measures when most of the country is under lockdown is not very helpful. So we have to do this. We have to make sure it's targeted in the right kind of place. Simply throwing it into the economy without thinking through exactly what are the transmission mechanisms and so on, it's not worthwhile. So whether it's the Ministry of Finance or the Reserve Bank, and we work very closely together, our view is we will do what it needs, but we will do it in a calibrated way, getting information along the way and putting it together. And you saw that you're repeatedly seeing both the finance minister and the Reserve Bank governor every week or so. They come out, they tell you a bunch of new measures, and then we nuance it according to the feedback we get, and we will do more if necessary.
Very, very closely with the RBI. That has become very, very evident. So, Sanjeev Sanyal, let me begin by also asking you this. You have seen rate cuts in the past. You have seen measures by the RBI to also make sure that there is transmission of liquidity, that liquidity percolates down the value chain, and that's not happened. Let's not just even talk about what's happening with the AAA rated companies, only them getting access to liquidity, but the fact also is you've got nearly 8 lakh crore rupees parked by the banks. Given what's happening today in the ecosystem, in the economy, it almost seems criminal that the 8 lakh crore rupees is just being parked and nothing is being done about it. What is it that the RBI and the government of India can do together to make sure that those funds with the banks are indeed used optimally?
Clearly, the issue of transmission is a serious one, and we take it very seriously. So this is the context in which, for example, the government announced last week that it would be doing 100% guarantee for the additional loans given out to the MSME sector. So we fully appreciate this particular problem with transmission. There's also, of course, if you look at the government bond market, while short-term interest rates have declined very sharply, even after this announcement, you can see that 10-year yields have dropped to somewhere in the 5.85 range, which in my view at least is very, very high even now. I think it should be down maybe below 5% at this point. Anyway, the point is we take this matter seriously. We are now clearly working very closely with the banks, understanding their concerns, but at the same time, we are also making sure that there is no cascade of defaults. So that is one of the issues that obviously we are concerned about. And so you can see that we are providing moratoriums. The IBC has been laid off and put aside for about a year, and so on and so forth. So we are continuously, you see, this is not about having one grand set of measures in the beginning. We have to continuously nuance it according to what we do, the feedback we get, and then we again do it. And we have to have some ammunition in there for next round of steps if necessary. So this is something we will take your feedback, and on transmission, we fully agree with you, and we will do what is necessary.
Okay, so then the other question I want to ask you, while all of this takes place, there is a big fear that delinquencies are going to rise, that businesses are going to fold up. The governor himself has said that that there is the gravest of risk to growth. Against this backdrop, we have seen the Prime Minister and the Finance Minister come out with the 20 lakh crore rupee package, the New Deal. But Sanjeev Sanyal, part of the New Deal is also supposed to be increased government expenditure. At least that's what we saw in post 1929 and the two world wars. That still has not taken place. We have not seen the government announce new projects, whether it's infrastructure, road, construction, textiles. We've not seen that. So where are you going to create demand? Demand is also collapsing. Can you tell us a little bit about this? Because on one hand, while we talk about the lack of credit offtake, on the other hand, we've also got to ask who's going to take the credit.
So first of all, let me say that there are various stages in this. One of the issues right now is simply stabilization. There is demand for credit, but that credit is not for investment. That is mostly working capital and keeping the system going kind of credit, which is absolutely necessary. So we need to provide that right up front. We recognize, however, that further out, there is a demand problem. Now, as I said, right now we are in lockdown. We are unwinding that lockdown. So some part of the demand will just come back naturally. Recognize that longer term, we will need to do other things. A very important component of that is, of course, to lower the full architecture of interest rates. So that is one of the things that you are seeing. It is not just a short-term provision of interest rate reductions. We want to lower the whole architecture of interest rates, and there is clearly one part of that is the issue of cutting reverse repos and other things. But then the wider architecture has to also be lowered, and there are many things that need to be done with that, and we will do it as well. And that relates also, of course, to the transmission issue you raised. There are other things that need to be done. For example, what will you invest into? Now, clearly that requires supply side measures, because otherwise, in an environment where, if you're expecting that you're going to get demand going back into a sustained, self-fulfilling spiral upwards, then you won't get that, because you'll get you can spend a lot of money, you'll get one time maybe some some boost for a short while. But in an environment where globally there's so much uncertainty, not just from COVID, but also from geopolitical tensions and so on, and generally the demand for exports being so weak, you are also going to not see the sort of second and third round. So that requires you upfront begin to do all kinds of supply side measures. And so you have again seen us doing serious supply side measures. We have liberalized the agriculture sector, and many steps are being put in place for that. I think last week you will remember the ECA, the Essential Commodities Act amendment being announced. Already APMC Acts and other things are getting eased up at the state level. Things are being done with labor laws. For decades, people talked about labor laws, but they now have a clear framework on privatization. And I think you will remember the Honorable Finance Minister made it clear that while we will retain the public sector in strategic areas where we have to retain them, but in non-strategic areas, we are quite unapologetic about privatization. And while this may take some time, because market conditions and other things also matter, but I think in terms of our view on the matter, I think no other government has been this absolutely categorical about our approach. So there are many things we have done in mining as well, and other things may also get done along the way. So the point is, you have to begin to create this space for this investment to come, and we are doing that with supply side measures. While we are opening up liquidity, we are creating conditions for further lending, and yes, there are other things that we will do as well. I mean, whether you're talking about large projects to get investment going and so on, but obviously many of these things require us to already be opening it up. I mean, you can't ramp things up while you're in lockdown.
So let me rephrase that, Sanjeev Sanyal, that a lot of the measures and reforms which have been announced are longer term. Their impact will only be seen in the longer term, right? In the short term, is this the end, or will we see a concerted action by, once again, between the government and the RBI, the government alone as well, just to make sure there is more money in the hands of Indians so they go out and start spending again, whether it is for consumerism or whether it is to actually increase investments? Because right now there is a fair psychosis and you need to break that psychosis. So is it the end of the road, or are we going to see more stimulus measures from the government? For example, the Prime Minister at that speech at 8 p.m. talked about tax rationalization. We haven't seen that as yet.
You have had a marathon set of announcements in the last 7 days. First, the Prime Minister's speech. Then you had 5 days of announcements with the Finance Minister. Now today you had a slew of measures from the Reserve Bank Governor. Let that seep through. We will take feedback and we will come back and do more if necessary. This is not the end of either the COVID-related slowdown in the world, nor is it the end of the kinds of measures we will announce. And I think I keep making this point, and I've made it over and over again. We have gone for a different approach from other people who may have gone for the big bang approach in the beginning. We have gone for a calibrated step-by-step approach, and we will continue with that calibrated step-by-step approach, both, by the way, for the economic response, but also for the health response. And even there, you will remember, what we have done is we first did a lockdown to get a sense of what was going on and to maybe create some sort of a break in the spread of the virus. Then, since then, you will see we have been easing up step by step, taking feedback on the ground as it goes, and increasingly we are decentralizing the management of this to the states and so on, because that's the only way to manage this. So the same thing is, just like the lockdown is step by step being unwound, we will also ramp up the economic growth, economic response step by step. But be clear that we will not use up all our ammunition right up front. It would be a wrong thing to do, because this, as I said, keep saying, this is not a sprint, it's a marathon. So we will be looking at what the response is from these measures, and where there is tweaking necessary on the supply side measures and other measures, we will do so. If other things need to be done from the monetary and fiscal side, we will also consider them.
Sanjeev Sanyal, if we could now come back to the announcements by the RBI. So you've seen relief coming in as far as the moratorium goes, the timeline for that being extended. Also, the feedback that had been received from the public at large was relief was needed for what was happening with the interest component. So that, of course, is now being converted to as part of the term loan. How successful do you think this is going to be? Do you think this is going to be effective? Because the banks are also saying those subscribing for the moratorium are not in the kind of numbers that had been envisaged earlier by the RBI and the banking fraternity. And what about the feedback that always comes that while the RBI is acting, while the government is acting, it could act with a bigger heart. It could act keeping in mind the kind of pain the business community, the public is going through, the borrowers are going through. Why does it always seem very small?
So that depends on how you think about it. It's always very easy to go out there and simply spend taxpayers' money. But remember, it also runs up debt, and then you and your children will have to repay it. So we have to be careful and calibrated about how we go about it and not use up all our resources. That doesn't mean that we don't have resources. We do. We have monetary space. Even now, we can have monetary space. One of the few countries in the world which actually has genuine monetary space even after these cuts. We also have some fiscal space. And we have lots of supply side space as well, where we can take measures. So I think you are underestimating the amount of efforts and that we have done or what we can do going forward. But to say that we should go out and expend all our ammunition is wrong. After all, many countries have done very large packages up front. And since you right in the beginning talked about the market reaction, well, look at what happened to their market since then. Expended all their ammunition. So, there is something to be said about our approach.
So, Sanjeev Sanyal, I know I don't expect you to give us what's going to happen going forward. You made it very clear. This is not the end of the road. Of course, everybody's got a view whether the RBI should print more money or the RBI should finance the deficit. Can you tell us your views as a principal economic advisor with the RBI sitting on lifetime high Forex reserves? Today it's been revealed it's currently at $487 billion as of May 15th. What should be the right way or should be used at all when we talk about the Forex reserves and this absolutely unprecedented situation of COVID-19?
Well, one thing it clearly tells you is that the foreign exchange reserves are rising, suggesting that the rupee is not under any threat at all, which should not be surprising. I remember about a month ago when I was on a show like yours, maybe on your show, a lot of people talking about how the exchange rate was under enormous threat. And I pointed out at that time that the exchange rate is a relative, not an absolute measure. And in a global shock where all other countries are also under stress, in fact, probably under more stress than we are, then there is no particular reason that the exchange rate should be depreciating. So that is precisely what has happened. And, despite there may have been some volatility, but in general, it's quite obvious that the rupee is not under any threat at all, because why should it depreciate against other currencies where they are monetizing and or cutting rates and doing other things much more aggressively in some cases than we are. So in my view is that the rupee is very stable. There is no question that that gives us one anchor that is stable. The other space we have is the fact that inflation is likely to be quite weak. There may be some supply side issues on the food side, but that will get sorted out as we end the lockdown. There is simply no inflationary pressure anywhere in the world, by the way, and certainly not in India. Oil prices are low, domestic demand for virtually everything is weak. So again, inflation is another area where we have space to maneuver. That means that we have monetary space to do many things. So we will utilize it.
So Sanjeev Sanyal, as I come to an end of this interview, I also wanted to ask you this one question, and this is based, of course, on the feedback and a lot of reports that are public as well from global brokerage firms, leading economists as well, where they want to see the unimaginable from the Indian government. We've come out with a 20 lakh crore rupee stimulus package, but like I said, it's a reboot. It's a very important reboot and reset, the gains for which we will see in the longer term. Is there a fear that, India is being guided too much by what the sovereign rating will be, the bureaucratic measures when it comes to fiscal deficit and all of that? Or is India going to be ready to do the unimaginable, step out of the box, zoom out?
We will do what is necessary. I think the overall framework has already been clearly provided by the Prime Minister. He talked about Atmanirbhar Bharat. He said this Atmanirbhar Bharat is about a certain economic model which includes us aggressively working to insert ourselves into global supply chains and, in fact, capturing global supply chains where possible. It's about promoting Indian companies, promoting Indian brands, and so on. And I think we have a very clear view of what we want to do. We have backed that up with several supply-side measures, but also demand-side measures. And you've seen more of that coming from the Reserve Bank. So you can see various elements of the government machinery. The Reserve Bank, the Prime Minister himself, the Finance Ministry, and so on. You can clearly see now how that new India that we are trying to reset to is coming together. And let me assure listeners and viewers that we will be moving in this particular direction step by step in a calibrated way. This is not the case that we think that there is a silver bullet that will solve it. That's not the case. We take feedback, we will do more where necessary. And of course, remember, simply unwinding the lockdown itself will allow a significant amount of demand to come back. So that will allow us to have something to work on. Right now in a lockdown, you see, there's no point in trying to stoke demand, because the whole point is that you've locked things down. You don't want those economic activities to happen. So now that we are unwinding it, there is something to play with that you can boost and cultivate.